What is up, trading family? Wildcard in the booth with TB, and the S&P just printed a number it has never printed before. 7,700. Dow plus 900. Q's up 3.4%. And yet this morning, futures are flat. Pre-market is dead quiet. The VIX is sitting at 16.3, like we're on a Tuesday in July. Except we've got two wars running and a Fed chair handoff that hasn't been tested yet. Everyone's going to watch the autopilot spike at 9:30, but the real question today is what happens at 10 a.m. Job openings drop. And that's the first live witness on the Kevin Warsh story.
Quick reminder, nothing we say on this show is financial advice. We're two traders talking markets, not telling anyone what to buy. Do your own research. And Wildcard's right about the setup. Futures are flat, the S&P closed above 7,700 for the first time ever, and the 2-year yield ticked up 1 basis point this morning while the 10-year drifted down. The short end is not buying the dovish handoff story. That 10 a.m. JOLTS print is the first real test.
That's the hook, bro. 2-year yield is already saying, hold up. We need proof. The market bought the piece and dovish double feature yesterday, and this morning the bill comes due. Wave trader, what's the live read?
One signal out of 322 screened yesterday. Added Ambarella, ticker AMBA, into strength. That's it. My model is not seeing broad opportunity here, and neither am I. I'm not buying today. Cash parked.
Same here. Cash parked. No callouts. The gut book already has the energy trade through the energy sector, ETF, and forcing anything new into a record high with a binary catalyst at 10 a.m. is how winners become losers. We learned that in June.
Let's get into it. Two stories driving everything this morning, the deal trade and the earnings gauntlet. Start with earnings, because last night set the bar in the ugliest possible way.
AMD, bro. Revenue up 50% year over year. Data center revenue up 107%. Absolute monster quarter. Stock down 8%. Down 8%. When the tape rips 3% into your print. Good is the new bad. That is the lens for every single report today. And there are 492 of them coming this week.
And the first one that matters is already out. Lilly, ticker LLY, reported pre-market. My TFT algo is holding Lilly from $1,118.15. That's a live position on a live event. Novo Nordisk, NVO, is time TBD today. This is the GLP-1 superfight day. The entire healthcare complex is watching this number.
So what's the verdict? Did Lilly hold, or did it catch the AMD disease?
Early indications are solid, but not spectacular. The number beat consensus, the guidance was raised, but the stock is only up about 2% pre-market. After yesterday's tape, a beat and raise should spark a bigger move. The AMD shadow is real. The market is rewarding perfection less enthusiastically. If Lilly fades into the open, that's a warning. Healthcare is down 3% on the week already.
And after the bell tonight, we've got SanDisk and Western Digital, SNDK, and WDC, the exact chip storage names that got wrecked in the July sell-off. If they print good numbers and get punished, like AMD did, the rotation out of chips accelerates, and the melt-up hits a wall. That's the test.
Disney, Shopify, and Uber also reported pre-market, but Lilly is the pivot. My model bought Ambarella yesterday, but the name moving the whole tape today is the one TFT is holding. That's not spotlighting the algo. That's using it as a compass.
Let's flip to the deal trade, because this is where the tape is lying to itself. Bloomberg's own read says, half yesterday's euphoria was Iran deal hope. Half was just the Korea route ending. 50-50 promise and relief. And the promise is still not signed. Besant said today or tomorrow. It's now tomorrow. Centcom says, the southern route is open. Trump called it last chance on camera, and oil is up 1% this morning. The market is buying the rumor for the 157th time. And I'm asking, where's the paper?
The oil move is the tell. If the deal were genuinely priced in, crude should be selling off on the peace premium unwind. Instead, it's up. That's a paradox. The market bought a war premium unwind yesterday that hasn't actually happened yet. Either the deal signs and the unwind accelerates, or it doesn't and oil snaps back violently. Both outcomes are possible, and neither one is priced.
And that's exactly why I'm not adding to the energy sector, ETF long. Entry at 56.94, it's at 58. 52 now, stop is at 54.30. The position is working. The thesis is intact, but buying more into a binary headline is forcing it. Deal dies. Oil snaps back. My thesis breathes. Deal signs. I get tested, but my stop holds the line. Either way, no new money into a coin flip. That's the discipline from the June call-out review. We stacked every miss we had on oil geopolitics calls. About a third of all our misses were declaring a new floor in crude.
Right? And oil geopolitics is our measured blind spot. We've called for floors that didn't hold, we've overestimated risk premiums, and we've been wrong on timing more than direction. So the counter case to the energy sector ETF thesis is worth stating plainly. If the deal actually signs this time, the war premium doesn't just leak out, it collapses. Oil could trade down to the low 50s in days, not weeks. Your stop at 54.30 protects the downside, but the invalidation level is simple. If the deal gets ink, the thesis needs a full reassessment.
Fair. And if the deal gets ink, I'll reassess. But until I see paper, it's a promise trade. And promise trades have burned this market 156 times already. I'm not betting the house on number 157.
Let's move to the earnings calendar because this week is stacked.
492 reports, bro. Lilly already out pre-market with Novo TBD today. That's the heavyweight fight in healthcare. Disney, Shopify, Uber also pre-market. And after the bell, it's SanDisk and Western Digital. But the real spine of the week isn't just who reports. It's whether the tape can keep rewarding perfection after AMD fell 8% on stellar numbers.
If SanDisk and Western Digital catch the same treatment tonight, the chip rotation is no longer a rotation, it's an exodus. Those names are directly tied to the July tech shakedown, and another beat and punish would confirm the market's appetite for chips is exhausted at these levels.
Economic calendar is where the real fireworks are today. JOLTS job openings at 10 a.m. Consensus, 7.4 million. Prior, 7.53, 7 million. That is the number, bro. A hot print above 7.5 says, sticky labor, the Warshfed story gets tested before the man's even in the chair, and the 2-year yield stays firm. A soft print validates the dovish red, long-in rallies, and fire insurance gets cheaper.
And then payrolls land Saturday, not Friday. Do not let anyone fumble the calendar on that.
Saturday payrolls, non-farm consensus, 88,000, prior 57,000. Unemployment rate consensus, 4.2, unchanged. But JOLTS today is the first live witness. We also got the IBDET tip economic optimism index, consensus 47.5 versus 45.5 prior, and Atlanta Fed GDP, now holding steady at 6.2%. But nobody's watching those. Everyone's watching 10 a.m.
The labor market is the first Fed test under the new regime. Warsh hasn't even taken the chair yet, and his inflation stance is already being priced in. Barclays and HSBC both published notes this week pushing inflation-linked bonds, TIPS, specifically citing Warsh as the reason. There's a MarketWatch headline today that literally says, "Don't ask about the plan to bring down inflation."
That's the quote of the day. Don't ask about the plan. The new sheriff's not going to shoot inflation, so the market buys its own fire extinguisher. And we're seeing it everywhere.
Sector rotation tells the same story. 1 week performance. Technology, the tech sector, up 9.24%. Full recovery from the July drawdown, magnetic, consumer discretionary, XLY, up 5.17%. Communication services, up 2.16%. The leaders are all growth, all risk on.
And the laggards? Consumer staples down 1.94. Healthcare down 3.09, utilities down 3.1, classic hope rotation, out of defensives, into long-duration growth. But here's the kicker, VIX at 16.3. That's not a rotation with panic. That's a rotation on faith. One bad JOLTS print, and staples come screaming back.
The international flows support the rotation thesis. Nikkei plus 3.6% overnight, Kospi plus 3.76. The July wound is closing.
Kospi plus 3.76. Bro, that's the engine story. 20% of leveraged Asian assets traced to Korea. 65% of Asian trading revenue flows through those pipes. When the retail tape in Korea rips again, that's direct fuel for United States growth names. The Nikkei and Kospi are the plumbing underneath the record.
Hang Seng up 0.25%, Shanghai Composite up 1.81, China rebounding but no fireworks. Europe is muted, DAX up 16 basis points, FTC up 27 basis points, Euro Stoxx 50 flat. And the yen carry trade is asleep. Dollar yen up 4 basis points, euro dollar and the dollar index flat. No unwind pressure, no stress in the plumbing.
Which brings us to the fire insurance segment, because this is where the tape is screaming something nobody's talking about. Stocks at all-time highs, and the market is simultaneously buying hedges like it's a crisis.
Let me lay out the data. Gold at $4,216.90, up 1.5%. Record territory alongside equities. Copper near record highs, front-running tariff risk. VIX at 16.3, which sounds calm, but it's egregiously low for a world with two active wars and an untested Fed chair. That's not calm. That's the tape holding its breath.
16.3 with two wars running and a Fed handoff. The market's buying fire insurance in gold and copper, while volatility itself is priced like a Tuesday in July. And what happens if 10 a.m.? Job openings come in hot. That cheap volume is the first thing to snap. A hot number means sticky labor, the Warsh Fed story gets tested, and the VIX exhales.
The bond curve is arguing with itself too. 10-year yield down on peace hopes, 2-year up 1 basis point. The long end is buying the dovish story, and the short end is rejecting it. Someone's wrong.
And Barclays and HSBC are telling everyone to buy inflation-linked bonds because Warsh won't fight inflation. MarketWatch literally says, don't ask about the plan. So what's the tape doing? Buying gold, buying copper, keeping one hand on the eject button while the other hand buys all-time highs. The bull case is simple. If Warsh is soft on inflation, gold, copper, and energy keep winning. The bear case is that this cheap VIX breaks first, hot jolts at 10 a.m., and the insurance trade gets violent.
My wave trader algo added Ambarella yesterday into strength, but my personal paper, my gut book, is not chasing anything here. Apple and BYD are sitting right at record highs. Stops are wide, no new hedges needed. The market is buying its own insurance at all-time highs, and that's a signal to let the 10 a.m. answer come to us.
Same here. The energy sector ETF in the gut book is already the energy and insurance play. Gold up 1.5% is chasing. Copper near record is chasing. When the market's stuffing its pockets with fire extinguishers while dancing on the table, you don't join the dance. You wait for the smoke alarm. That 10 a.m. JOLTS print tells us whether the insurance is overpriced or underpriced.
The VIX at 16.3 is the billboard for the whole show. Records yesterday on a promise. Answers today at 10 a.m. And the sneakiest number on the board is the one that breaks first if the answer goes the wrong way.
Let's close it out. Here's what we're watching tomorrow, or today, as this thing unfolds, live.
First, JOLTS job openings at 10 a.m. Hot or cold, that's the first move in equities and the 2-year yield. A print above 7.5 million and the record high starts feeling its age. Below 7.4 and the dovish red gets validated.
Second, Lilly full-day reaction. Does the GLP-1 leader hold its pre-market gains, or does it sell off like AMD did on great numbers? That's the verdict on whether healthcare gets bought or buried.
Third, SanDisk and Western Digital after hours. The chip storage duo, if they get punished on decent numbers, the rotation out of semiconductors accelerates and the melt-up hits a real ceiling.
And fourth, VIX break levels. 16.3 is the breath hold. A push above 18 after JOLTS is the exhale. That's volume snapping back and the insurance trade getting repriced in real time. Watch 16.3 like a hawk at 10 a.m.
One more level, 2-year yield. It's already up 1 basis point this morning. If JOLTS comes in hot and the 2-year pushes above its recent range, that's the bond market telling the equity market to slow down.
Cash parked, no forced trades, no padding. Just the trading family getting the real read on a record that still has something to prove. Records yesterday, answers today, and we'll be right here when the 10 a.m. bell rings. Stay sharp, stay disciplined, and don't let anyone tell you a record high means the work is done. See you on the tape, trading family. Booth out.